Welcome everybody, my name is Gerald and this is Taking the First Step. Welcome to the channel. Cue the intro. Alright guys, if you're new to the channel, welcome. So happy you were able to click on this video. And if you're not new to the channel, welcome back. I appreciate you coming back from our fourth video. And today you probably know we're talking about M1 Finance. Yes, video 3 of 3 on the FinTech portfolio. So without further ado, let's get into M1 Finance. I've been talking about M1 Finance for a while now. And today I'm gonna get to show you why I think it's one of the best platforms to use for long-term investing. Now, no, I'm not talking about day trading. There's so many better platforms to use for day trading. Matter of fact, this is the worst. This is for people who are in it for the long run. If you're talking about retiring, if you're talking about retiring accounts, brokerage accounts, and truly investing and not necessarily trying to jump in and out of stocks on speculation plays, this is the platform for you. It sets you up for that long-term future goal and does a lot of the work for you once you do the initial research for the stocks that you think will be your winning horses. So I'm gonna cut over into the screen and we're gonna do a screen share and I'm gonna talk you through some of the things M1 Finance provides. And most likely this might be a 2-part series video. If it is, bear with me. I wanna make sure I keep this video under 10 to 12 minutes. So I might have to break it up into 2 videos. So that means you can just come back for the second video. Without further ado, let's get into M1 Finance. So as you can see here, this is what they call the Finance Super App, where you can invest, borrow, and spend all in one place, straight from your cell phone, or as you can see from your desktop computer. So let's briefly go over what M1 Finance offer and what their M1 Plus account is. So they offer to be able to let you invest for free, use intelligent automatic investing tools for a portfolio of stocks and ETFs for free, let you borrow at 3.5%, access flexible portfolio line of credit once you have $10,000 invested, and then you can also spend with their banking account. So if you have the Plus account, as I do, you can still invest for zero, but it gives you opportunity to invest in the very morning and also in the afternoon, so you'll be able to invest twice a day. The way they set it up is that on the day you put money into the funds, that very next trading day, first thing in the morning, they then invest those funds into your stocks that you already have pre-allocated to where they need to be invested. Second, if you look here at the borrow, you'll be able to borrow up to 2% or borrow at 2% interest rate, interest only, for up to 35% of what your portfolio has. And then if you have their checking account, you'll be able to save and earn 1% cash back whenever you swipe your debit card, or you could earn 1% interest on the money that you leave within their checking account. And if you do decide to go with their M1 Plus upgrade, I think it's $100 a year, but it gets you at 2% interest rate and also let you have the 1% cash back and the 1% APY for your checking account, and then it also lets you have that second window of trading. All right, let's log into my account. So if you look here, you see my overall portfolio, but what I really want to do is walk you through how to set up your own portfolio. And if you see in the link below, you can see if you use my link, you'll be able to get $10 once you deposit $100 into the platform. When you go up here, you want to initially set up your account. Now this is just my brokerage account, so my overall portfolio, and then also a Roth IRA. So for first-time investors, and I really advise you set up a Roth IRA. This is a retirement account that you can start investing in as soon as you start working, and then up to $6,000 per year until you're 50, and at 50 you can invest up to $7,000 per year. The awesome thing about the Roth IRA is you pay the money after tax, so any money that grows over the next 10, 20, 30 years, let's say you start off with $6,000 in this account, and let's say you never put another dollar into it, and 40 years later you pick really amazing stocks or a really good ETF, which I'm gonna advise to you, 40 years later, that $6,000 turns into $200,000. You get to take that whole $200,000 out tax-free once you're in the retirement age, which I believe is right now 69. Who knows what that'll be 40, 50 years from now. But right now, 69, it comes out tax-free. That's the difference between a Roth IRA and a traditional IRA. With the traditional IRA, if you put money in, it's pre-tax. So you get to write it off against your taxes, or they just don't charge you tax for it. But then when you pull that money out later in life, you then have to pay taxes on it. So that same $200,000, you'll be taxed at whatever tax bracket you're in at that age. So once you click on that, you want to set up the account. It walks you through it. You go to start to build your portfolio. So with that, you look at browsing your pies, look at expert pies, or search for ETFs and stock. So for me, we're going to click on view pies. So I already set up these pies. I'll share this in a link below. I have my ARK Invest ETF fund. I have my overall portfolio and my very first pie. Now this is where I keep 90% of my money in my very first pie, which consists of Tesla, Square, Facebook, Illumina, Spotify, and Revolve Group. It's only 6 holdings, but the 1 year return is 262%, which is pretty amazing. So I'm not mad at that. But if you look at expert pies, or if you look at funds, let's look at the fund that tracks the NASDAQ, which is the QQQ. So if you put $100 in, what it's saying is, if you put $100 in exactly 5 years ago, today that would have grown to $262 or so. So that's because the performance is up 119% over the last 5 years, which is absolutely amazing, out of this world. On a good fund, you get year-over-year return between 7 and 12%. That's considered good. But for me, I'm about great. But here's some of the research tools so you can look at your funds, research. So if you want to go to Apple, you can click on Apple, click on Microsoft. It tells you about their market cap, PE ratio, dividend yield. When they say dividend yields, that means how much money you get back. So if you have $1,000 invested in this account, you're getting dividend yield per year at 0.98%. That means $1,000 will be $9.80 that you can then reinvest back into Microsoft. So you get paid by owning their company. So again, you search for these, you want to do your due diligence, you click on these stocks, you research them, you click back on Apple, it tells you about Apple, it tells you their employees, it tells you what market they're in. You can read up on the latest news, click up on it, you can add it to your basket, remove it from your basket, and then this is how you set up your very first basket. So for the sake of time, I already have my first basket set up. Take Apple off, and I'm gonna add that to my portfolio. Save it here. So how this works from here, talk about cash balance. So what you need to do, you need to set up your first deposit. So that means for a Roth IRA, your minimum has to be $500. So you'll select the account that you set up once you link together, and then you'll transfer this over to your Roth IRA. And this normally takes the next business day. So it's the weekend, so this will be deposit first thing Monday morning. So let's say you make that minimum $500 deposit, which again, it works out to, if you can make $500 the first of the month or 15th of the month every month, you'll get that $6,000 every year, which is really what you want to do. You want to maximize all these tax saving benefits for your retirement. So you make that initial deposit. If you click this auto invest, so let's read on it. Auto invest. If you turn on it, auto invest will automatically invest all of your cash. Trading will be initiated once you have at least $25. You can also set a minimum cash balance to remain uninvested. Let's say if you want to keep $200 in cash or $500 in cash at any point in time, that you can pull out quickly, or if you see an opportunity, you can invest in that. So you just want to have cash in the account and not have to sell. So you can set a minimum balance that you always want to have in cash. I wouldn't necessarily recommend this for a retirement account. Yes, for a brokerage account, but not for a retirement account, because we're thinking 30, 40 years down the road. Either way, you set up that minimum cash balance to remain uninvested into your account, and the trading will be initiated once your balance is over $25 or wherever that set amount is. Example, if your set amount is $1,000, they will start trading once your balance is over $1,025. Everything above that, they will automatically trade into the pie that you set up. So whatever pies and slices that you have set up, that is where it will trade into. And then all deposits and dividends are added to your cash balance. So if you get those dividends, it will be added into your cash, and then you can set up auto invest so it can reinvest back into those companies. So that being said, you can look at your very first pie. Here are your holdings. You can buy and sell. You can rebalance it. You can edit. As you can see, my target is 40% of this pie. I want in Tesla, 25 in Square, 10 in Facebook, 10 in Illumina, 10 in Spotify, and 5% in Revolve. And then you see, because I'm M1 Plus, I can do the trading first thing in the morning and also in the afternoon. So, and then here it'll have your activities, your holding, and your funding. So let me jump out of this real quick and go to my overall portfolio so you can see what this looked like. So you look at my first pie, you can see this in the time view. So you can see I started off in May with $100, and then I added 10,000, and then you see I added more and more. So this was from May until today. You can see this chart is up $8,652, which is 55% return in basically 2.5 months, which is really good, mostly because the Tesla is up 93%, and Square is up 60%. So those are reasons why the account is up so highly. But as you can see, it gives you your portfolio. It lets you look at what your current value is, your gains, your return, how much money you put into it, what the stock price is now, the daily change, the market cap, PE ratio. It doesn't give a dividend. More news about Tesla. You can buy and sell more. You simply just need to add money to that to your account. And because it's a broker's account, I can have as much money in here as I need. But this is supposed to be a quick overview. I feel like Mario over at 12 minutes. So I'll do a follow-up on this video so we can talk more about M1 Spin account, which is basically the checking account which you can use. And you have your debit card, you have your direct deposits, you can lock the card. You see you have 1% APY, 1% cash back, and then the borrow account. So as it was saying, because I have a close to 40,000 or a little over 40,000, I can borrow up to 35% of that account balance without selling any of my stock or shares. So that means I have $1,400 credit limit at an interest only rate. So if I need to borrow, let's say $10,000 for tomorrow, I would be able to do so. Simply go here, borrow, put in 10,000, and I want that sent straight to my Chase or my Spin account. They do this without running your credit at all. So this doesn't show up against you on any credit reports or anything of that nature. It's simply money that they let you borrow from this account, and you pay back at any time. And it would charge me $16 a month until I paid that balance off. So it's only interest, no principal. But again, we can go into that later. And if I did this, if I press continue, it literally would deposit my account within a minute. So I'm not going to do that because I don't need the money. But yeah, so here's an overview of M1 Finance. I hope you found it helpful. I hope you guys enjoyed the video. If you did, please consider leaving a like, thumbs up down below. Also subscribe, hit that notification button. And if you do like the M1 Finance platform, please consider using my link in this description below, as right now I'm making these videos for free because I really want you guys to get this information, to know this, understand what it means to be financially free and how we get there together. It starts with taking the first step and understanding financial literacy. So hopefully, if you haven't heard of a Roth IRA before, or IRA, you had a little bit of information, then you maybe go out and research it on Google, look into it, look into M1 Finance. Tell me what you think in the comments below. And again, thanks for watching the channel. You guys are awesome. Have a great rest of your day. Peace.